All right, Rohit, many thanks for those details. Slew of FMCG results seem to be coming in today. GCPL, in fact, is the one. Sales are up about 30%. Net profit is also at 141 crores, up about 36%. Let's listen in to the management commentary. Adi Godrej seems to be speaking out there.
Just to add to Mr. Godrej's drivers, one of the major driver is the innovation platform which we have taken. And we are extending the innovation fund towards all the three core categories. If you look at the soaps during the last year and even the next year, in Godrej number 1, we have introduced the saffron and milk as a variant. And this year we are introducing another variant again. So innovation pipeline is so robust as far as Godrej consumer products is concerned. We are focusing a lot on innovation and new product launches. So that is one of the real growth driver for us. Apart from, as Mr. Godrej said, the merger has led to a big amount of synergy between these two companies. Now, what is the best way of creating bigger value in this merger? We decided about 2 years back is to how we create a value in that. So one of the focus is innovation. Now the Godrej Expert as a brand which we had, and that has again entered last year with the innovative product. We completely renovated the product and we launched Godrej Advance and Expert Advance and Godrej Expert Care. So these are tracking well, and I think even household insecticide we are entering mainly focused on Goodnight as a brand which has got a very good brand equity. But when the brand equity is very high, if you do not leverage the equity through innovation, you're not going to get the right organic growth. And that's what Godrej Consumer Products is doing. At Godrej Expert is a very good brand equity. Goodnight is there, Hit is there, and of course Godrej number 1 and Synthol. So these are the major brands which we have. All the 4 brands are exceedingly very high level of brand equity in the market, which is all built over a period of time, this brand equity. The question is, how do you leverage the brand equity? Through an innovation funnel.
So there has been concerns about continuous depreciation in a lot of GCPL's key reporting currencies. The Indian rupee, your Indonesian rupiah, the basket of African currencies against the US dollar. What kind of an impact will that have on consolidation of the foreign subsidiaries?
First of all, many of the currencies are not, for example, the Indonesian rupiah has appreciated. The Indian rupee has depreciated, and clearly we provide for the forex losses as the case may be, wherever required. So our results are after providing for forex loss, if any. And we are not very concerned about it, because even if there is depreciation, the earnings in rupee terms will still rise. And in many cases, the earnings of our foreign subsidiaries go mainly on a dollar-based growth rate. So we're not very concerned. There will be ups and downs, and even the earlier also the rupee depreciated from 45 to 54, then it appreciated again to 48. So these fluctuations will come and go, but we don't think we are negatively affected.
And also the dollar exposures which we have are long-term exposures. So short-term fluctuations don't have much of an impact. And again, as you have seen, the debt-equity ratio is very comfortable for us.
All right, let's just pull up that Dabur counter view. In fact, the results have come in and they're pretty good. Net sales at 1363 versus 1108. PAT is coming at 170 crore rupees versus 147 crore rupees. Revenues and profit after tax, both of the estimates are above, both of the figures in fact above estimates. EBITDA margins at 16% versus 19%. So there seems to be some bit of pressure on the margins. Mithali joining us with more details. Mithali, the stock seems to have reacted positively, but clearly margins seems to be a problem for Dabur.
Well, this margin contraction was pretty much expected. Now let me run you to the basic numbers. All in all, numbers pretty much in line. A good set of numbers is what that has come in. If you see, the top line has grown close to 23%, whereas the bottom line has grown 15%. Margin came in at 16% versus 19%. We were estimating 17%, but this kind of margin contraction was estimated. If you see, the proportion of the ad sales that had gone up, and that was increase in branding and advertisement costs was the reason that the margins have have seen some pressure. If you see margins, if you see ad sales, the percentage of a sale have come in close to 13.2% as a percentage of sales. So that is almost a jump of close to 40% on a YOY basis. Even though the company had been facing input cost pressures, the raw materials related to crude have remained at a high. So that has impacted negatively for the margins for Dabur. But this kind of margin, the margin contraction was expected. But all in all, on the top line and bottom line, a good set of numbers is what that has come in.
Mithali Israni there with the Dabur results. Thanks for joining us, Mithali. But let's move on to another important policy meeting that's happening today. That's to take stock of the cotton export controversy. In fact, Agriculture Minister